So, hello, hello, hello. How's everybody doing? How's sound? Is sound okay? Can anybody give me an okay? So, no trade calls, no recommendations. Everybody's sponsored for their own stuff. We're here for educational purpose only, and let's do this. I'll try. This will be recorded as always, so it'll be out on the YouTube channel later on. So, no problem for anybody who wants to watch it after we finish. So, let's see what's going on. Hey, Brian. Hey, Luca. How's it going? So sounds okay. Okay, so let's do this. So basically, we've got some time here. I don't have anywhere to go. So as usual, we can talk markets, we can talk charts, and hey, thank you, man. And we can stay on as long as there are questions. So if you just want me to talk through what's going on in the markets, I just sit back, and if you have anything you want me to look at, if you have any chart you want me to discuss, if you want any trade you want to shoot through, just write it in the comment section. Don't be shy, and we'll cover it. I think one of the most interesting things here is the move on the dollar, right? And we've been discussing this for quite some time, actually in the last updates too, right? It seems that a lot of people, once the dollar broke down and hit the 100 mark, everybody started thinking, die dollar, die, the dollar's doomed. And what we said is, this is really, you have to watch out, because this is a very, very aggressive reversal we saw at the 100, right? And basically, we had been stuck in a sideways range, and this is what we would call essentially a false break, right? And once you get this false break, we said, high odds that the market will eventually try and rotate back into mid-range. And the range we're working with is 106, 103, 100 now. And what happened is, we rotated back into mid. Now, once we got into mid, again, a lot of people were looking for the continuation, and it was an open call, right? Because this is a break lower, move back into this descending trend line. You had the 200 DMA here. So this is where the bears had to come in, step into this, and keep this channel going, right? But what happened is, again, the bears could not hold it, and the moment we popped above the pivotal 103, which is mid-range, right? What happened? You could see every pullback, every little pullback into mid-range number one and the 200 DMA 2 kept on getting bought. And at this point, this is just still a range trade, right? Broader range, low end of the range, mid, high. So this is extremely technical, because as you can see also, we had this descending trend line. And number one, we're holding mid. Number two, so that's number one. Number two, we're holding that 200 DMA. And number three, previous resistance is acting as support. That trend line is acting as support. So the natural thing is, as long as the market can base here, is for it to rotate back into the opposite side of the range, still holding the 106, 100 range. Okay, so that's what we're looking at, and that's what you want to keep an eye out for, right? This is a really important dynamic. And again, as long as this happens, you're seeing those bonds still trading heavy, and markets trading a little bit, hey man, how's it going? A little bit wobbly here. So right now we're in a little bit of a twilight zone on the dollar, right? Still with inside a bullish rotation. Would it make sense? Would it be to see a little bit of a pullback? Sure, that could be fine. But right here, what you want to focus on in terms of this dollar move is the range is still 106, 103, 100. And as long as we don't trade back below the 103, as long as we don't trade back below the 200 DMA, as long as we don't trade back below this trend line, the path of least resistance, or what the market is trying to do likely is to try to move back into the top end of the range. Where do people really get hurt? If we trade below 100 or above 106. Inside, this is still very manageable inside this range. Nothing crazy going on. Short-term traders getting in trouble, but really in terms of the bigger picture, this is still a fairly comfortable range. No big deal. But that's what's what's going on with the dollar, number one. Okay? So, number two, gold. As we've been discussing in all these updates that we're doing every month since pretty much forever, you have to pay attention to these failures at highs, right? And as long as that dollar is going to continue to firm up, risk is for gold to trade back into the 100, right? Very, very similar trade across the board. So here, clearly, some people will be talking, is this some kind of an inverse head and shoulders? Is this trying to bottom? Then other people are saying, no, this is trying to top. Bottom line is, just keep in mind that once you're getting into this 2000, you can have as much as you want. There are plenty of sellers, right? And globally speaking, into this bottom end of the range, there's still plenty of buyers. So this is just stuck, right? This is just a range trade. And really, anybody who's got gold for sale is very happy getting this price. And anybody who's involved in gold is making money here. So nobody's complaining. This is a very comfortable price for everybody. But likely, this is going to follow the dollar. The only time it will turn if there is very, very aggressive risk-off flows in terms of panic, but especially as long as the dollar is rising because of rates staying higher, there's very little reason for gold to catch an aggressive bid. Okay? Now, another interesting thing to keep an eye out for is on crude, right? Here, especially with everybody getting excited and everybody still hoping for the Fed to start to stall or cut rates, you have to pay attention to what's happening in crude. You have to pay attention to what's happening in the commodity complex across the board. You can look at DBC. It's an aggressive break. Is it going to hold or not? But as long as these DBC, these commodities start to rip, and you've got crude trading strong, it doesn't really bode well for everybody who's looking for rate cuts. Okay, so right now, what you want, this is very technical, a lot of buying here. What you want to watch is, can it hold this breakout, right? Now, could this try and come back into this previous high? Sure. Could this try and come back into the 10-day moving average? Sure. That's going to be the key. As long as it can hold this breakout, then the path of least resistance is more towards the 90s, possibly higher. And this is really an important dynamic you need to keep an eye out for across the board, because this is going to impact, the Fed and inflation across the board, across the world, right? So what does that mean in bond land? Is, once again, we've been discussing this for a long time, and this is fairly slow, steady grind lower. And a lot of people got a little bit excited last week also when you saw Bund trying to pop above this descending trend line. But really here, this is still in trend. This is still working. This is still heavy, right? And usually, especially on stuff like bonds or stuff like Bund, it's rare to see a long-term bottom formed without any kind of exhaustion. So my base case would be that this still needs to get tested, but I'd like to draw your attention to the weekly or even the monthly. If this breaks, there could be one hell of a flush. So you want to be careful there, right? And that's a similar discussion on if you're looking at ZN, ZBs, UBs, but look at ZNs here, right? Everybody got a little bit excited because it moved back into the 50-day. But really, what we discussed, it is rare that this really bottoms here kind of on an equal low. And ultimately, this broke, still holding this descending trend line. All the moving averages are still in place. So the risk here is also for this to flush lower. And remember what happened last time, rates flushed lower, people got scared about rates. It doesn't bode well for risk across the board. So you want to be a little bit careful. You know, a lot of people will also be talking about seasonals, September being a month where you see ugly things happen. Remember, the seasonal patterns on September is actually slightly bit at the beginning of the month, and it can actually rally hard into OPEX, but then it's after OPEX or quad witching that it gets a little bit more heavy, okay? Now, if you look at it in terms of what's happening on stocks, so we can look at the ES, basically, bigger picture, ES is holding this big 50 back rotation, which is pointing to this move completing into 5400, 55, okay? Shorter term, what's happening is we're stalling at these highs. We can't hold the 50 back. We can't hold, sorry, the 4,500, and we're getting sold in a sloppy manner at the 61.8. So here, what I would be doing and looking here at the ES is what you want to watch is, as long as, especially on data, this comes back and trades and can hold above the 4,500, ideally in terms of also weekly close, which nice weekly pattern, then the risk is for the market to try and rip, try to go back to all-time highs, try to fill this gap towards 4,600. But if it can't, this really opens a lot of gap fills lower, right? A lot of gap fills lower, gap fills to 4,300, and a potential flush all the way back into 4,200, this 200 DMA, right? I don't think it's a done deal at all here, and especially if there's a little bit of a panic in bond land with the dollar with rates, then we could see this move extremely quickly right back into those lows to fill that 4,300 gap, and then, you know, it's a second to flush into the 200 DMA. Ultimately, unless there's something really crazy happen, if we make our way back into the 4,200, maybe Fed panics, you know, we're getting towards the Santa rally kind of time, it may be a very interesting buy into the back end of the year. But, you know, for now, you have to be careful trying to buy these highs. It's probably here that the nice buy is higher or lower, right? On a break higher for the gap fill, on a break above these highs for a complete rip, or on some basing at the 100 or at the 200. Here, this is a very precarious kind of level. And if you look at YM, also it's having trouble. Russell at the 50 back having trouble. NASDAQ trying to stall a little bit here. So it's a very, very similar situation across the board. And here, if you're looking at Fangman also, you know, is it trying to put in some kind of a top? And you can see it pop back in, fill this gap. And you know, it's really hard to say here because we won't know unless this trades much higher or lower, whether there's some decent Momo, because right here we're still hovering around in chop zones. And as you see that dollar firming, you know, there is no reason to short yen unless there's a little bit of panic. This is actually holding a upside rotation in a channel, slowly trying to make its way back into these highs. Euro, as we said, is making its way back into the 105. That's the bottom end of the range. That 105 on Euro equals the 106 top end of the range in DXY. Risk is here, the dollar stays strong, for Aussie to come back into these lows. Kiwi to come back into these lows. Cable back into the 123. You know, still the moves we discussed last time are trying to play out and are moving along nicely, right? So right here, it's just a question of waiting to get through or waiting for the next key data points, waiting for the next, seasonal patterns, waiting to get through this OPEX to see what happens. But again, it should be an extremely interesting September with a lot of opportunity. But I think right here, it's important not to be too bullish or too bearish. It's important to keep an open mind and stay nimble, because there's a lot of trading to be done. There's going to be a lot of opportunity, but we're kind of those inflection points where if you're too stubborn one way or the other, you can get into a lot of trouble. And there's really no need. There's plenty of intraday moves to be able to trade in a nimble fashion without having to take a longer term position. Okay? Any comments, any questions, anything anybody wants to look at, anything anybody wants to discuss? That's, that's essentially pretty much where we are, right? CAD struggling to catch a bid, even oil going higher. USD CAD is back at, here, USD CAD is a tricky one. People like to trade it looking at crude. The problem is, USD CAD, a lot of times it gets caught in the crossfires between crude and equities when they're not completely in sync, right? It could get caught inside the crossfires of the dollar, of crude, of equities when they're not completely in sync. So here, basically what I would say on dollar CAD is this is tracking the dollar, right? It's not getting as much oomph as some of the other ones because, of course, of crude and some of the other dynamics, but this is going to track the dollar, right? So if you see this dollar squeezing hard and trying to make a move back into that 106, it's very unlikely that CAD can decouple completely and follow crude, if you see what I mean. Also here, the issue is in terms of bigger positioning, right? If crude is, you get to a position where on crude, good news is bad news. So instead, if you've got equities going sideways, bonds falling, so those yields rising, that dollar ripping, and everybody clinging on to the hope that Fed's going to cut rates, you see the energy component and all the CPI, that means that they're nowhere going to be thinking of cutting rates. So all of a sudden that becomes, even more bearish bonds and even more bullish dollar, right? So I think really here, if you're going to trade USD CAD in general and you're trading it intraday, technically that makes sense. But if you're trying to trade CAD based on what's going on in crude or something else, it's always a hard one because it gets caught up in a lot of stuff. Yeah, we looked at gold earlier. I mean, there's not that much going on gold. I don't know what the time frame you're looking at, but as long as you've got that dollar firming up and rates moving higher, there's very little reason to go in and pile into gold. Really, this is a huge chop zone inside the 2000 and the 1800 because you've got plenty of buyers coming in once we get to the bottom end of that range, but as much sellers as you want into that 2000. As you can see fairly clearly, if you're looking at a monthly or you're looking on a weekly chart, there's just a wall of sellers of these highs. So this is just a huge choppy area. But right now we're in a phase where everything's fairly in sync. So there's really no need to make it harder than it should be, right? You just look at what the dollar is doing and rates are doing, and most things are going to follow. Yeah, I mean, here, look at this. If you're looking at USD CAD here, you see how it's similar to that breakout in the dollar? So that resistance of that descending trend line is acting as support now. The 200 DMA is to the downside of support. The moving averages are trying to turn. So as long as it holds this breakout, the risk is, for the move back into these highs. Now, if it loses this breakout zone, then it's a different story. But globally, it's very, very messy. I think there are nicer trades out there, right? In general. Any comments, any questions, anything anybody wants to look at, anything anybody wants to discuss? Trying to see if there's any other interesting chart out there. Yeah, China not to, desperately trying to pump markets, not doing too good of a job there. DAX, DAX and Eurostox, and even Nikkei, if you want, are interesting charts. I don't trade them that much, but what you can see here, Nikkei is just following USD JPY, and it's just in stupid mode, so I wouldn't worry about that. Anyways, it's all BOJ. But if you're looking at Eurostox, it's still working off this very ugly failure on the weekly and even on the monthly, right? It's very ugly failures on those higher time frames. And you can see here how the weekly 10-day, it is all pointing to potential unwind of this whole move, right? And here it's really has to hold on. 200 DMA, this is failed expansion to the upside. This is starting to, some people might call it a megaphone at highs, but it's not looking pretty. If it can flush these lows, you wouldn't be surprised to see a much bigger correction from here, easy 8 to 10%. And if you're looking at DAX, it's the same pattern, right? You see the ugly reversal on the monthly, ugly reversal on the weekly, and these are in play, right? And these are in play, and really it's this 200 that needs to hold this previous high, and that's where the game is going to be fought. Also here, it's heavy. Bounces probably, unless there's a big catalyst, are not going to get huge traction. And the risk here is still that these lows give with some kind of a catalyst. And also here, you'd be looking at easy 8 to 10% down. So, you're getting a situation where, across the board, you're looking, the consumer's not doing that well. You've seen it in the States, you've seen it, in Europe across the board, because these higher rates are slowly starting to sink in, right? So mortgages are starting to reset higher, car payments are starting to reset higher, taxes, yada yada, are increasing so slowly. This is going to weigh more and more and more on the consumer that's been, pretending it's not a problem or these rates haven't been passed down yet. And, if this continues to become apparent in the data, as it probably will, it doesn't bode well for the consumer and it doesn't bode well for risk, right? SU do they have it on this on, let's see, why is this showing it not Suncor? Oh, here it is. Yeah, so here, look at the monthly, okay? Look at the weekly. It's been rotating off just the same way as DAX and Euro stocks have been. Does that make sense? Hey, Knut, how's it going? It's a very similar pattern, you know, so again, you'll see this across the board, and it's the same thing. You had a previous failure at high, and then what happened? The market got pumped, and it tried to break out from this previous failure. And once it broke out, what's happening here, which is slightly different, but it's even more, it's a whole series of lower highs. Then there was a kind of trying to stall here, and we've even broken lower, right? So this is very precarious, right? You've got a gap fill down here. That's about 14% away. But here you need a catalyst to break this descending trend line for a rip back into these highs. But as long as this descending trend line can't get taken out, and especially if we take out the 200-day moving average, the risk is a lot of gap fills to the downside, starting at, 4%, 6%, 7%. There's a lot of downside potential. Okay? Yeah, exactly. That cost of living increasing, all these rates are going to reset on all kinds of instruments. Is just going to get worse, right? So, and especially if you have crude ripping, commodities ripping, it's not going to do anybody any favors. So, it's not a time to go pedal to the metal, long risk across the board, really. Okay. Any comments, any questions? More than happy to look at any chart. Anybody wants to? If not, we'll call it a day. Hey, my pleasure. Yeah, maybe we can look quickly at, some of the tech stocks, right? So what you see how they're coming back, like for example, Apple, to try and fill this gap here. AMD still heavy, Amazon still off those highs, ARK still heavy, Google off those highs but bid. Microsoft still stalling. Remember, Microsoft's still holding this very ugly reversal here, right? Facebook stuck. So really what you want to see is NVIDIA still hasn't managed to take out that 500 yet. What you want to keep an eye here on tech is you want to see, do they all start to regain Momo? Because unless you get a day where they're all up strong or they're all up or all down strong, likely what you're going to see is funky rotations, choppy action across the board. It's going to be hard to read too much into it. So I would, unless you get a market that's really in sync on the single stock names, I would much rather look at the dollar, and that's going to give you a much better read of the way you should be positioning yourself for what's likely going to happen, okay? Good stuff. So it looks like no more questions. As always, guys, thank you so much for liking, for sharing the video. Thank you so much for stopping by and for the questions. We'll do it again in a month's time, okay? All the best. Thank you so much. Take care, guys. Bye-bye.